Hi guys, good morning and welcome to Money Control. My name is Karunya Rao and joining me in conversation right now is Gaurang Shah from Geojit Financial. Of course, all eyes on Reliance Industries today. The numbers will be out later this evening. But Gaurang, this time around, what exactly will be the big parameters or the businesses that you will be watching out for?
Thank you, Karanya. And our estimates is and our focus primarily will be on the new age business that has been contributing extremely well to the balance sheet, especially with respect to Geo Digital. Uh, Oil to chemical business, that is O2C, is likely to do a little bit better than what we've seen earlier on fallback of lower windfall taxes rate that was been much elevated, and that resulted into in excess of 4,000 crores of outgoes towards windfall tax. So that should do well. Uh, FMCG venture that they have recently got into is likely to deliver a little bit in between 5 to 6% of contribution to the balance sheet, and the acquisition of Metro should augur well going forward from here on. On the refining margins, well, Reliance has been delivering well because purely because of the high-end technology that they have, which wherein they can refine high content of sulfur crude, and that results into a much better gains in terms of refining margins. Traditional business, I think we'll have to wait and watch for the commentary from the management. But our sense is that Reliance Geo and Digital should be the prime drivers going forward from here. And of course, because of the lower windfall tax, O2C business should also contribute sizably.
What is the sense on Geo? Because we recently had a estimate cut by JP Morgan on Geo's EBITDA for FY24. Of course, the street also will be awaiting more update on Geo's 5G rollout. So that's definitely something that people will be closely tracking. But overall, how are things looking in the telecom space?
So, Karanya, to be very honest, even for you and me and for other individuals, over the last year and a half, the data expenses have gone up considerably purely because of the usage of data that one does. Along with that, like you rightly mentioned, the 5G rollout, and of course, we'll have to wait for systems upgrades from multiple cell phone manufacturing companies to get 4G phones upgraded to 5G, etc. You have 5G cell phones, handsets available already. So it's going to be a work in progress, if you ask me. In terms of ARPUs, well, I think consistent uptick over the last couple of quarters. Even if you look at the commentary from the management of other cell phone service provider companies, they have been quite confident that going forward we might see closing to 200 rupees over the next couple of quarters. This may not immediately, but I think between 175 to 180, 185 could be the kind of ARPUs that you can watch out for.
Okay.
Once we have definite rollout of 5G, the ARPUs are likely to go up because of the technology and the usage. And more importantly, Karanya, in metros, tier 2, tier 3 cities, you have a decent subscriber base wherein usage of data content is quite high. But more important is the connectivity which has reached semi-urban and rural India. And as in when we have connectivity improving in semi-urban and rural India, I think ARPUs are going to contribute to a sizable extent. So we know there could be a short-term blip, but long-term we are quite confident that ARPUs are going to move up north.
Okay, well, interesting. Let's also talk about the energy business. Now, in the last quarter, the government's special additional excise duty on export of refined products had a cost impact of 4,039 crores, of course, which resulted in a flattish profit growth on a YOY basis. This windfall tax has now been revised lower several times since then. And how are O2C earnings now likely to be? Will we see a significant recovery on a sequential basis? How's the energy business looking right now?
So the downward revision as far as the windfall taxes are concerned has opened gradually. It has happened
Mhm.
gradually, and very recently, I think about a couple of days back, we had again a downward revision as far as the windfall tax are concerned. Uh, for Reliance, especially if you ask me, I think diesel and ATF, that is aviation turbine fuel, will be a sizable contributor. But it will not happen immediately because this is still work in progress, and the very recent cut happened just a couple of days back. So for that to translate into positivities in earnings, it may take maybe another quarter or so, if you ask me. But if this is how downward revision is going to happen, then I think companies like Reliance Industries and other peers in the competitive place will benefit over here. But it won't happen immediately. I think there will be a slight improvement. And the fact that you rightly mentioned, and I also mentioned about in excess of 4,000 crores on fallback of this windfall tax, was something that impacted and resulted into a flattish kind of a growth. I think that should translate into a little bit of positivity. So to have a sizable contribution, it may take a little bit while.
And what about green energies business? Because Jeffries had recently pegged it at $8 billion, and we were actually, seeing reports across the board that Reliance Industries could actually hive off green hydrogen business to InvIT. So, any updates on that also expected by the street this time around, or
So
too early days?
I think the early the better, to be very honest with you, Karan, because the government is working on a
Yeah.
fast track mode as far as green hydrogen and clean and green energy is concerned. And the fact of the matter is that India still remains to be energy deficit states when it comes to certain parts of semi-urban and rural India. And my sense is that in today's post-market, when the numbers are out, there is going to be a sizable portion of the verbatim from the management which will be focusing on clean green energy, especially green hydrogen. And Reliance has already, laid down or rather given a blueprint of a roadmap in terms of how they want to take this green hydrogen, contribution taking forward. So I think it's going to be it will be very interesting to listen into the commentary as far as the green energy is concerned.
Yeah, I mean, it is definitely a huge space with immense opportunities, and we've seen a lot of action also happening in this segment of late. But let's talk about the oil and gas business, because yes, there could be sequential improvement in refining margins, but domestic gas prices, could that kind of offset the weaker petchem margins? Will they be good enough or high enough to do that?
So there has been quite a bit of choppiness and volatility in the international commodity market also when it comes to natural gas. That can play a little bit of a minor role of a spoil sport, if you ask me. But I don't see any significant dent coming through from there. So I think we'll have to wait and watch in terms of what the realizations are. And the fact of the matter is that India is moving towards zero carbon footprints, and government policy is also quite open in terms of the roadmap that lies ahead. So natural gas prices can play a small dent, at least in the near term, purely near term, because of the price volatility, but nothing significant.
And could the retail segment also see some moderation in underlying growth? Of course, Q3 is seasonally a strong quarter because of a significant chunk of festive seasons that fall in this particular quarter. There's the wedding rush as well. But going forward, what is the forecast for retail?
So my sense, Karanya, is that if I have to put the entire retail business of Reliance under one umbrella, and the fact of the matter is that we are gradually heading lower in terms of inflationary pressures. And if you have to just reflect upon the commentary made by the Honorable RBI Governor during the last Fed policy, he also mentioned in his verbatim that we have seen the top of the inflation and we are gradually heading lower. If I look at the data points also that were recently out in terms of CPI and WPI, it gives you a comfort zone in terms of, so lowering of inflation translates into an individual's capacity and capability to spend. And not to forget, Karanya, India is a consumption-driven story, and it will remain so given the kind of size of population that we have and the dependency that we have. So I don't think there is going to be any major impact in terms of consumption habits. I can only say that with lower inflation, it can only improve going forward from here on.
Okay, and finally, I just want to sum it up at sub 2,500 levels. Do you think investors should actively and optimistically look at buying Reliance Industries?
So I think I should have given this disclosure earlier, but nevertheless,
Sure.
we have maintained a positive bias on Reliance on the fundamental side for multiple years. We remain extremely positive on Reliance Industries as an investment bet. And if you
Hmm.
actually go to see, I don't think there would be a single asset management company in the large cap universe fund which will not have Reliance Industries in their investment large cap funds. We
True.
are extremely positive on the verbatim given by the honorable chairman, Mr. Mukesh Ambani, as when it comes to taking the business forward. And as of now, we do have a coverage. I think downside is extremely protected in terms of investment. If you have a low risk appetite, don't go and put all your money at one time.
Of
Stagger your
course.
investments. I think that will be a better approach. If I have to, if my memory serves me right, I think 3,000 are the targets given the earnings that we've seen and the verbatim of new business going forward. We'll wait for the earnings to unfold this evening and possibly revise the target upwards.
Well, fingers crossed, everybody will be, blocking their time on Friday evening to check out what Reliance has to say about their performance and the way forward. Apart from the Q3 numbers, we will be getting you all the updates on Money Control. But thank you so much, Gaurav, for joining in and for sharing your thoughts and observations on the company's fundamentals.
Thank you very much for having us. Thank you.